Very good afternoon and welcome to Market View. It's a minute after 2. Thank you for tuning in. My name is Lungelele Makakula. The Eswatini Investment Promotion Authority last week shared the draft investment policy with the House of Assembly and the House of Senate. The draft investment policy will shape the kind of investment that is attracted and accepted into the Kingdom of Eswatini. Investors, both local and foreign, create economic activity through their business operations. This activity translates into jobs, export opportunities and overall economic growth for the nation. And as a result, the policy will help ensure that the investors attracted into the country are able to benefit the local market and economy through their presence in the kingdom. Spio Sami Kininza had a conversation with APA's legal officer Xolile Manyatela explaining how the policy will increase exports. And for today's financial markets, we'll connect with Sanele Biya. It seems that Langeni is doing well this Monday afternoon and gold as well. For now, let's go to business news. Welcome back. This is Market View. Thank you for tuning in. Let's go to business news. It's a common and accepted trope that free trade has led to more prosperity, yet free trade and another word that often accompanies it, globalization, are frequent targets of criticism, with both seen as eroding national sovereignty, taking away local jobs and harming the environment.
This is number one, but this is the first of many.
2018, President Donald Trump fires the first shot of a U.S.-China trade war, slapping 25% tariffs on $34 billion worth of Chinese imports, including cars, computer components, and airplane parts.
In particular with China, we're going to be doing a Section 301 trade action. If they charge us, we charge them the same thing.
Beijing quickly retaliated with equivalent duties on $34 billion of American products, and the trade war would soon escalate, with U.S. tariffs hitting Chinese metals and Chinese tariffs targeting U.S. motorcycles, whiskey, and orange juice. A truce called by Trump and Xi Jinping at the 2018 G20 summit was based on China ramping up imports of U.S. goods to reduce the two countries' trade imbalance, but it wouldn't last. By 2020, there would be U.S. tariffs on $550 billion in Chinese goods and Chinese tariffs on $185 billion worth of U.S. goods. That January, another shot at a détente as a Phase 1 trade deal was signed. But while China relaxed some of its restrictions on U.S. goods, it didn't mean the end of the trade war. Nor would a new government in Washington, as the Biden administration maintained nearly all the Trump-era tariffs.
China's undercutting American companies by dumping products, erecting trade barriers, and giving illegal subsidies to corporations.
Indeed, Biden has recently expanded tariffs, notably on Chinese electric vehicles, as the West accuses Beijing of leaning on heavily subsidized exports to make up for a slumping domestic economy.
2024 could mark a turning point for sub-Saharan Africa after 4 challenging years of shocks. IMF projects that growth will increase to 3.8% in 2024, up from 3.4% last year. Director of the IMF's African Department presents our analysis in the latest Regional Economic Outlook.
After 4 turbulent years, sub-Saharan Africa's economy looks to be at a turning point. We expect economic growth in the region to rise to 3.8% in 2024 from 3.4% last year. Inflation has declined markedly, and the region's debt level has broadly stabilized. With global financing conditions easing, countries are returning to international capital markets after a 2-year hiatus. These are encouraging signs, but important challenges remain. Many governments still face a funding squeeze, high borrowing costs, and looming debt repayments. And this is taking a bite out of revenues and therefore diverting much-needed funds from development spending to interest payments. This, in turn, is jeopardizing the region's growth potential. In a year heavy with elections, sustaining reforms will be important to ensure that macroeconomic conditions continue to improve. In all, an encouraging picture, with economic conditions broadly improving. It will, however, be important to sustain this momentum, notably by addressing three interlinked challenges: continuing to improve public finances with an emphasis on revenue mobilization, sustaining the focus on reducing inflation wherever it remains well above the target range, and reforms to diversify financing sources and growth opportunities.
At 6 minutes after 2, and that's it for our business news. Let's go for an ad break. When we come back, we go to the investor clip by Kolile Manyathela.
Do you reside in any of the Ubombo sugar communities or nearby areas? Here is a notice. A door-to-door TV license exercise will be conducted in your area from the 19th to the 28th of June 2024. The personnel conducting this exercise would be easily recognizable by their attire bearing the Eswatini TV logo and their individual name tags. Your cooperation is valuable to us, and we respectfully request that you participate in this exercise truthfully. Do not be deceived. It is not appropriate for anyone to request money for a television license. Make payment for your TV license by using MTN Mobile Money at 76222000 or by visiting the nearest post office. Eswatini TV, Sibugo Semaswati.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m. where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
sabadala ukuthi njengalokhu sivile sive sithi khulume.
Welcome back. You're still watching Market View. This is the first episode this week. As mentioned earlier, Sipho Sami Gininza had a conversation with legal officer as the Eswatini Investment Promotion Authority, Kolile Manyathela, explaining how the policy, investor policy, will boost exports.
Thank you for being with us on Market View. Who is an investor?
An investor is someone who makes a substantial commitment and a lasting interest in an enterprise. So we have someone who can be a domestic investor or a foreign investor. It's important to classify investors so that we can be able to know how much each is supposed to contribute or invest. So for one, if both this investor that I'm referring to are investing in a priority sector, which is a sector that we are looking into to provide incentives to those investors. So we can be able to say a domestic person can be able to invest 2 million and a foreign investor can be able to invest 10 million. And it will also help with the influx of people that are claiming to be investors, who are mainly business people coming into the country. So now we'll know who is an investor. An investor is the person who's going to have a minimum of 10 million capital, which can be machinery.
What are we trying to avoid? For example, the negative list.
Okay, what are you trying to avoid? The reason why we have made investment policies because the country has been operating in an investment policy vacuum area. We are trying to avoid people coming into the country as investors and displacing Eswatini in the business that they can be able to run, because the negative list include businesses like groceries, salons and butcheries. Those enterprises there's no value addition that you do as a person in it. So we're looking for someone who's an investor who will come in and add value into the country. So for businesses that are easy to operate, we are reserving them for Eswatini.
How are we going to increase exports?
We are going to make sure that we link our local business people with foreign direct investors. We have an FDI SME linkage program that we're going to introduce. So we'll be expecting those foreign investors to come up with FDI and SME linkage program on their own and submit to us so that we can be able to link them with that local business which is doing the very product they are requesting.
Where are we now in terms of exports potentially, and what are you willing to improve?
Exporting using the international agreement that we have, the likes of AGOA, FCTA, COMESA. We are looking to make use of this agreement that we already have, make sure we develop and capacitate more locals to export, and also to make sure that we take these locals to international exhibitions.
Thank you.
All right, that was legal officer at the Eswatini Investment Promotion Authority, Kolile Manyathela, just explaining how the investor policy will boost exports. Joining me now is in-house economist, Mr. Sanele Sibia. Mr. Sibia, very good afternoon and thank you for joining us. APA delivered this investor policy last week with the House of Senate and the House of Assembly. Just explaining how what contents are in the policy. Legal officer at APA was just explaining how it aims to boost exports. Currently, give us a picture of the current exports activities in the country.
Hi, Lulu, and thank you for having me. Thank you to the viewers for having us. So currently, what you would understand, Eswatini is actually a trading economy. Overall, we either import or export. So we know our main exports to be along the lines of, our greatest export is it's the syrups and, cosmetic products, followed by what you would look into within agriculture. So that is the landscape through what we are exporting as a country, and about 90% of that is actually destined for South Africa, and the 10% goes to the rest of the world. And when you look at the configuration of the country's trading relations and the trading agreements, we do have quite a number of valuable trade agreements that we could actually be exploiting. But for some bottlenecks here and there, we are not really exploiting much of the trade relations that we have. And once you then have a policy that's going to try and rationalize this, I would have actually loved it if I would table an export policy, just reinvigorate our export policy in line with the investor policy, so that we are really pushing towards an export-driven economy rather than one that is a net importer, because it's going to be our biggest source for growth as an economy that is not that well endowed in terms of natural resources. What we need to do is to basically build on the gains that we've made over the years in terms of our export capability.
It's quite clear that investors are crucial to create economic activity, but how important is it for these investors to ensure that local markets benefit as well?
That is what one would say, that is what would drive sustainability. When we talk of investors, these are people that are supposed to come into the country and transfer skills and actually just have that vested interest in seeing the product grow. And one of the ways in which we make sure that the product grows and the economy remains resilient is through linkages, through supporting the small and medium enterprise sector. And what we are seeing as part of this proposed investor policy is there's going to be that linkage between the bigger companies and the SMEs, such that when companies come into the country, they do not necessarily displace SMEs, but SMEs find a place within the value chain. And that way would be actually necessitating the skills transfer so that the SME sector in the country also grows, while at the same time we allow more investors to come in, with the expertise that we do not have, so that we can have that cross-learning. So at the end of the day, when investors make money, we also grow the local local sector to actually stay more resilient and continue the work when investors have actually gone, because, investors come and go as long as their interest in a country and in an economy still align with their overall interest for profit. But when you talk of SMEs, these are home-brewed companies that are going to stay, and they'll always find a place, a way to make business in Eswatini work, because Eswatini is their home and their potential for growth is actually in Eswatini. And if they can grow to a level where they can actually start exporting, that it improves the overall sustainability of the ventures, and it also improves the balance sheet of the country. So it is quite important and imperative, and we do applaud those efforts to make sure that there are those linkages so that we gain the benefits of foreign direct investment. So we do get this quid pro quo kind of an environment, and like a situation where we are putting all these incentives for local companies to get, and at the end of the day, when they go, it is as if nothing has actually been attained on the ground. Skills have been transferred. So this is quite an ingenious move on the side of APAC to actually set it up this way so that you have this linkage and cross-learning program.
Mr. Spear, what is your opinion on opportunities to diversify the country's export markets into the North and West African regions?
When you're looking at those opportunities, that's where our products are most likely to be competitive as compared to, trying to access markets in the global North. If you look at, when we did the numbers at some time back, a couple of years back, we saw that there's quite a lot of potential for Eswatini to venture into commercial markets, and also for Eswatini markets to venture into the West African region. So there is that likelihood, and that's the space that Eswatini need to start filling. We need to start taking advantage of the African free continental trading area and also take advantage of commerce. But for us to do that, we need to have industries that grow, and once they grow, they will then start looking for these new markets as compared to looking into the markets that we have just across the border in South Africa. But what is then also required is for us to strengthen our logistics network so that our commodities are able to actually get to those markets on time. So one of the major problems that we've seen with trading, intra-Africa trade, is the issue of logistics and the issue of flights, such that it's easy for one to fly into Europe compared to flying into another African country. So when we are looking into expanding trading opportunities within the continent, we also need to be mindful of the fact that there's still a lot of policy work that needs to go on to actually dismantle quite a number of these barriers, more especially within our logistics. Thank you.
Thank you for your perspective, Mr. Sibia. We will go for an ad break. When you come back, you'll give us an overview of today's financial markets.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Do you reside in any of the Ubombo sugar communities or nearby areas? Here is a notice. A door-to-door TV license exercise will be conducted in your area from the 19th to the 28th of June 2024. The personnel conducting this exercise would be easily recognizable by their attire bearing the Eswatini TV logo and their individual name tags. Your cooperation is valuable to us, and we respectfully request that you participate in this exercise truthfully. Do not be deceived. It is not appropriate for anyone to request money for a television license. Make payment for your TV license by using MTN Mobile Money at 76 222 000 or by visiting the nearest post office. Eswatini TV, Sibugo Semaswati.
Like it's 20 minutes after 2. We want to connect with Mr. Sbia to give us an overview of today's financial markets. Mr. Sbia, welcome again. Thank you for staying with us. As we await for cabinet appointment, how is the rand performing like this Monday afternoon?
Thank you once again, Lulu. So what we are seeing with the markets is it's taking a tad bit too long for President Ramaphosa to come up with his cabinet. The expectations were it was actually going to happen last week Friday. Given his track record, usually it would take 3 days to come up with a cabinet. So we're kind of hoping that was going to happen by now. But given the complexities that one has to maneuver right now within the GNU arrangement, and coming up with the cabinet is going to take a bit longer. So markets actually did respond to that in a negative way, as we've seen the local currency losing ground against all major currencies as we are waiting that to happen. So that is also been influenced by movements in Europe and also in America. We've seen the dollar getting a bit stronger in today's trading session, and also the pound sterling also got a bit stronger in today's trading sessions. So as we are waiting that GNU cabinet to come into the play, we have really actually seen those effects on the local currency, but it still remains on a very strong footing compared to what it had actually been for the past 8 months. It still remains very strong. So that means market optimism on the cabinet that Ramaphosa is going to appoint still abides in the markets, and it still lives within the markets, Lulu.
All right, so moving on to commodities, Mr. Sbia, I see gold is still doing quite well, even today trading at $2.3. Take us through these figures.
So what we are seeing with gold, gold again remains resilient, purely because we are still on that background of what is going to happen in terms of the interest rates in the US. That is one of the major factors that are driving how gold is moving. So we are seeing, the dollar is a bit stronger in today's trading session, so the gold is also benefiting on that. So it's really just gained a few points on the background of a stronger dollar. But while at the same time, markets are betting on, the marriage of economic news that is going to come out this week. More especially, we're waiting the consumer expenditure data to come out this week in the US, and that is actually going to show the trajectory for monetary policy. And as we are still awaiting that to see when the Federal Reserve Bank in the US is going to start cutting interest rates. But when you're looking at oil again, the stronger dollar has somehow taken a bit off of oil, but then at the same time, it also, as we are waiting those news to come out and really just signal how strong a demand we are going to have in the future. So that's why we are seeing these oil futures also just still on that 84 mark, but still on a very high, on the higher side of things. But we are hoping that, as the economic news keeps coming in the US, and the markets are just going to readjust those and see if we are going to see a further decline in the price of oil with a bit of stabilization in the Middle East that we are seeing right now. So it is quite expected that oil should remain relatively high in the short to medium term while we are still awaiting those news to come out. I think until Friday we should be on the 83, 84 mark, and probably touching 85 if the situation in Gaza and Israel just turns bad going forward.
Speaking of the U.S., big U.S. banks are expected to be cautious on shareholder payouts. How are the international markets performing, starting with the U.S. market?
So when you're looking into the US markets, what we are seeing there is actually a mixed signal at the start of today's trading session, purely because, when you looked at futures have actually traded a bit lower in today's trading session. But what we are seeing is the fact that, markets still remain very much on a positive note. If you are looking at your Dow Jones Industrial Average, it's actually coming on a touch of 40,000. So So there is optimism in the market in the US. And while we are still awaiting the consumer purchasing expenditure to come out this week, which is one of the baseline indicators that the Federal Reserve Bank looks at and actually uses that one to see how inflation is going to go. So as those figures are going to come in this week, they are going to give markets an even more and even further boost if they're coming up to confirm that we should actually expect at least one interest rate cuts this year. But markets are still pricing in two, with the Federal Reserve Bank pricing in one. But it's what we are going to see coming out this week that's going to actually show us how the markets are going to move in the US. And also we have GDP data coming out, quarterly GDP data coming out this Friday, which is going to show the resilience of the US markets. But then one interesting thing that's happening this week in the US, Lou, is we are actually going to have a presidential debate, and we post that presidential debate, we are going to see how polls are going to start polling the two leaders. And markets are a bit wary of a Trump economy versus a Biden economy. So this week is a bit edgy because there is that debate coming in, and it's going to give us quite a number of signals in terms of if this party wins, what is going to happen in terms of policy direction versus the other party. So that's why we are looking at in the US, and that's what we have to look forward to throughout this week.
So move on to perhaps Asia, the Asian markets and the EU markets this afternoon. What's the overall performance?
So probably let's start with Europe. So what we are seeing in Europe is it's a very happy mood in London and in Frankfurt and Paris. But one of the things that we are seeing happening in France is, post the snapshot election, and while everyone is still awaiting the results to come out, we're seeing Paris really just trading below that 8,000 mark, which ideally we've not seen in a very long time in the market. So now that shows you just how much faith markets have lost in France. But when you're coming into Germany, when you're looking into Frankfurt and you're looking into London, things are doing okay. Though we've seen that Frankfurt is really trying to boost their EV, the electronic vehicle market, and that's actually going to speak to sustainability going forward as the world transitions from the current, from oil to a sustainable market. So that's what we are seeing happening there. And in the UK, what we are seeing at that space is, markets are still edging closer towards the elections for July, but they're still on a positive note, and we are hoping that markets will remain and maintain that steam going forward. And then coming into Asia, what we are seeing in Asia is, a very lackluster relation, movements there. But what's more striking in Asia is the fact that looking into the Shanghai Composite Index is actually below 3,000 at this week. That's because we are seeing some renewal of the trade war, and markets are now starting to price that in with the presidential debates coming in. So we've seen China releasing news stating that they do reserve the right to retaliate in terms of, the tariffs and all of those things. So we might actually see a resurgence of the trade war. And then coming down into South Africa, what we are seeing there is, markets are still very much happy. They are still endorsing the GNU, staying well above the 80,000 mark, gaining some 700 points today. But still, we are awaiting the president to announce his cabinet, and those numbers may actually even improve further on the announcement of the cabinet. And, domestically, we still remain at the very same level of inactivity within the local stock exchange.
Yeah, thank you so much for that overview. Yama Markets today, this afternoon, Monday afternoon. Thank you very much, Mrs. Spear, for joining us. We've come to the end of our program. Lomusha, thank you for tuning in. We'll see you again tomorrow at exactly 2 p.m. Have a lovely day.